Funding for Market Journal is provided by the Nebraska Corn Board.
When we transform Nebraska corn into ethanol, it doesn't disappear from the food supply. It just takes a little detour. Ethanol is made from the starch. The rest of the corn becomes livestock feed to create meat and dairy products, corn oil, sweetener, and other food ingredients, and maybe a little carbon dioxide to make your soft drinks fizzy. Homegrown ethanol helps satisfy America's hunger for energy and the world's appetite for feed and food. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Frayne Olson previews the potential acre breakdown for spring planting. David Kohl describes the agricultural environment in 2016. Bruce Anderson explains why farmers and ranchers should have a drought plan for their pastures or ranges. And Al Dutcher forecasts how El Niño will impact U.S. weather conditions into next summer. North Dakota State Extension economist Frayne Olson is our grain market analyst this week. The USDA recently released its long-term projections for planted acreage until 2025. Under those assumptions, the amount of soybean acres farmers planted in 2015 would have been the most over the next 10 years. Total corn acres would be larger than 2015 in each year until 2024. Focusing specifically on next year, we talked with Frayne at the end of December to get his opinion on how acres will break down this spring.
Obviously, there's a lot of moving parts. A lot of the market analysts at this point that are trying to forecast acreage are really looking at the relative profitability of crops and trying to put themselves in the farmer's shoes, saying, well, what looks like it'll make you some money this year? And as I do that kind of calculation and that math process, again, there gets to be a lot of shifting. I don't know that we're going to see a large change in any one crop or any one area, but I do think there'll be some subtle shifts going on. I guess as I look into my crystal ball, I'm looking for a small increase in corn acreage. I do think the soybean acreage will be relatively flat, although that can be heavily dependent upon what happens in South America. I think that the wheat acreage, all wheat acreage, may be up just slightly, which is a slight difference from what USDA is looking at. And I do expect sorghum acres to be down.
Your corn and soybean projection, that would differ a little bit from what the USDA is suggesting, yes?
Yes, it is. And again, this is a matter of looking at relative profitability and what you think farmers will do. I guess one of the reasons I'm looking at a slight increase in corn acreage is because of the bump we had in sorghum acres in 2015, which was really stimulated kind of on a short-term event because of the large exports that went into the China market. That China has changed some of their policies right now, and we're not importing nearly as much, or they're not importing as much sorghum from the U.S. as they did before. So sorghum prices have fallen fairly quickly. And we do have regions of Nebraska as well as Kansas and into Oklahoma that can flip between the sorghum and the corn acres. And so I do see sorghum acres dropping. I think some of those acres will flip into corn. As we get into the northern plains here, at least in North Dakota specifically, I do expect corn acres to be down in North Dakota. But again, when you look at regional differences, I think we'll start picking up some other acres in other parts of the U.S.
If you look back at how farmers changed their acres with record corn and soybean prices, how have farmers responded now that prices have fallen back?
Well, we've come off of unprecedented corn and soybean and wheat prices in the last several years. Of course, the market was telling farmers we need more of these high-value crop acres to come into production. They started switching things around. We started pulling acres out of hayland. We started pulling acres out of some of the smaller market crops that we grow here in the northern plains. And we were able to find what we needed. Now, as we move into today's environment, you're absolutely right. As prices come down, some of those acres will more than likely shift back into some of those alternative crops. And people often forget how many acres go into annual hay production. and how many acres go into alfalfa production. And that's pulling or competing with the higher valued or higher productivity land that we use for corn and soybeans. As well as, again, some of the smaller market crops. We have a lot of those up here in North Dakota. So as we look at total cropland acres, we had an expansion in the late in the late 20-teens. I think we're going to see some of that that expansion retract now. I do think we're going to see total cropland acres drop off as we move forward.
And you mentioned that Northern Plains region. You've said this before, that there are areas that are kind of a transition zone and can flip back and forth. Are those farmers starting to go away from some of the main crops and back to maybe what they would have grown years ago?
Well, I'm certainly getting a lot of questions. I've been traveling a lot the past month or so, going to a lot of different meetings, talking to farmers. They've got a lot of questions about, is there some profit opportunity in some of these smaller market crops, the crops that we grew several, 10, 15 years ago, or even sometimes 5 years ago. And looking at it and saying, well, we need to back off. The corn isn't as profitable as it used to be. We are in a transition zone. We're comfortable producing these crops. What's out there that might look like it may make a profit in 2016? And so there's a lot of questions going on. I do think we're going to see some of those corn acres, at least in North Dakota, be flipped to something else. Right now there's some profit opportunities in some of the pulse crops. Some of the minor oilseed crops look like they'll have some opportunities as well.
Let's talk about the January 12th reports, Frayne. There's a lot of meat on the bone that day. What are you looking for?
Well, there's going to be some major reports. We're going to have the winter wheat seedings report, which again will be important because that'll set the stage for how many acres of corn and soybeans are we going to end up with. We're going to have the quarterly stocks report, which is really important for the corn market because it's so hard to track feed usage, and that's kind of the only real measure we have for how quickly we're using the corn crop up. We're going to have an update for the WASDE report, which of course is always important, especially at that time of year, because we'll have a better read on what's happening in South America. And then finally, we'll have the official final production reports. So we'll get the final estimates, the official estimates for both yield and acreage for the 2015 production.
We're early, but do you expect any shocks?
Right now, I really don't expect any major shocks. I think the one that the market will be looking at the closest will be the WASDE report to try and get an idea of what's going on, in particular in the forecast for exports as we move forward in time. Probably the next most important will be that quarterly stocks report, because again, we follow that very closely to get a measure of what's the actual consumption within that block of time between reports.
Next week, Roy Smith will join us to look at corn and soybean markets. Iowa State Extension livestock economist Lee Schultz will also join us to recap the USDA's quarterly hogs and pigs report. U.S. farmers set a record for net farm income in 2013 at more than $123 billion. For the 2015 fiscal year, the USDA believes producers' net farm income will be less than $56 billion. Further, the drop from 2014 to 2015 is expected to be the biggest single-year plunge since 1983. The decline isn't exclusive to one area either. The agency believes receipts from crops will fall nearly 9% and those from livestock will go down 12%. At the Farmers and Ranchers College held in December in Bruning, Nebraska, David Kohl spoke about positioning operations for success in the future. We spoke with David at the Bruning Opera House during a break in his presentation about challenges ahead in 2016. We began by asking about the mood of ag audiences as he's traveled the country this fall and winter.
I think one of the things is we're in this economic reset in agriculture, and of course we're coming off the great economic super cycle. The mood is, kind of cautious out here, and one of the things that I would have to say, whether it's producers or whether it's lenders or agribusiness, they're all here for insight. And the other element is they're looking at how they can position themselves, particularly for this reset period. So I would have to say quite cautious, but also still looking for opportunity.
How serious do you think the threat is ahead? Are we talking about the threat of failures and defaults?
I think one of the things that we're going to see, and we're in a reset period that starts in 2016. It could last till 2020. Initially, one of the things that you will see, you probably won't see too many defaults, but you're probably going to see A number of producers rejected on operating lines of credit. There's going to be a lot of refinancing. Those that don't get the opportunity to refinance or are declined on operating credit, it's going to get very, very tough and very, very difficult very quickly.
What are the good managers doing right now in their operations?
Good managers are focused on 2 or 3 areas. Number one, they're looking at how they can cut costs, particularly on cash rents. Number two, and we're really experiencing this, that they're cutting back on machinery investment and machinery costs. And then number three, this will surprise you, they're looking at powering off some of the family living costs, because if you think about it, in that period from 2007 to 2012, farm family living costs doubled. And now that we're kind of in this reset period, both in the crop and the livestock industry, powering back that family living cost is going to be very critical.
Let's talk about the strength of the U.S. economy. What do you think the chances are that this one heads into a recession this year?
It's real interesting. We're about the 78th, 79th month of business expansion since the last recession. The PAR is about 84 months since 1969. Citibank came out the other day and said a 65% chance of recession. Dr. Yellen, chairperson of the Federal Reserve, said no chance. I think it's above 50%. And what I'm starting to experience, it's starting in the core of the country, in the Midwest, in manufacturing, agriculture, and energy. And I think it's spreading out toward the East and West Coast. So I think it's 50% or plus. And that's going to be very critical to the beef industry, because one of the things is if we go into recession, people will substitute other meats for beef. So our ag producers have got to keep a very close eye on that.
Let's move globally. What does the slowdown in China mean for producers here in the Midwest?
It's interesting you ask that question. I was in Lincoln, Nebraska at the Fall Agribusiness Conference, and a speaker the day before said China doesn't matter. China does matter. Well, it's only 1% of the U.S. economy. It's very, very critical for the flyover states. That's what Wall Street and Washington, D.C. calls ag and rural America. And one of the things, they really fueled the super cycle, the insatiable demand for food, fiber, and fuel. So China's real critical. And one number you need to keep an eye on in China, the official growth rate is 6.9%, but my boots on the ground in China say it's basically 2 to 5%. And so if they should slow even further, it's going to have some devastating impact on ag and rural America. It'll hit the machinery sector, manufacturing sector as well. China does matter.
What other parts of the world are you keeping an eye on?
I'm keeping my eye on all the emerging nations, ranging from Brazil to Indonesia to India. But I'm also keeping my eye on the Middle East. And if you really think about it, oil. Every recession since 1969, oil's been a lead indicator. Oil prices too high or too low. And that oil, Jed Clampett's black gold, is very critical. So keeping your eye on the Middle East and any oil-producing nation, including Russia, is going to be very, very critical. And then the final area, keep an eye on Europe. Consumer trends, social trends, and I would have to say governmental trends often start in Europe, and then they come to the United States 8 to 10 years later. And so kind of keep an eye on Europe as a bellwether.
Let's talk about 2 age groups of producers here to close out. Let's start with millennials. What advice can you give them as they enter what is not a very hospitable environment of agriculture?
Well, I think one of the things I would tell any young person, the best opportunities come during the reset or the down period, because everybody wants to be in it when it's great. And one of the things that you're going to see is a tremendous opportunity for millennials, because a number of the older producers are coming up to me and saying, you know, maybe I'm going to cash out. And another note for millennials, 21% of the farmers and ranchers have no next generation to come back, so that's opportunity. But our whole banking, ag lending sector, our agribusiness sector, there's a satious demand for opportunities, because up to half of our ag lenders will be gone in the next 5 years. So there's going to be tremendous opportunities, and also just the ability to carve out their part in life. It's going to be, I see, a tremendous opportunity.
Now, the older producers that are starting to wind down their operations, what do they need to know here with perhaps significant risk ahead?
Well, first of all, they got to live till they die. And I say that facetiously, but oftentimes the older producer thinks about an estate plan. Well, you got to think about, are you going to have enough money or investment to have a standard of living till you die? So things like long-term health care insurance, medical insurance, very, very critical. The other element is if they're going to transition their business to the next generation or to someone else, what's going to be that transition plan? They're going to have to ask the real tough questions. What's going to be my role? What's going to be the new person's role out here? So again, that transition management is going to be very critical to anyone over 50 years of age watching this program.
We talked in our previous episode with Tina Barrett from Nebraska Farm Business Inc. about 5 financial resolutions for 2016. You can find that interview in the December 25th episode of Market Journal on our website. The Fremont Corn Expo takes place this Thursday, January 7th at the Christensen Field in Fremont, Nebraska. The event runs from 9 until 3 and will feature discussions about on-farm research, cost-efficient cropping practices, and disease management. We asked Nebraska Extension Cropping Systems educator Nathan Mueller to outline the day.
It's a great group of speakers from around the region talking about ways that they can help you find profit in producing corn in 2016. That's something growers are really worried about, and so that's what we're going to focus on. The keynote speaker this year is going to be Bob Nielsen from Purdue University, and he's really going to focus on hybrid selection, seeding rate, and decisions on fertilizer. So really looking at some of your input costs a little bit more critical given our profitability looks to be pretty short this next coming year. It's a free event, great food, popcorn, and we'll have a whole bunch of local exhibitors. So it's really a must-attend event for local corn growers around the Fremont area.
You can find a full layout of the Fremont Corn Expo on Nathan's blog at croptechcafe.org or through a link on the Market Journal homepage. The Fremont Corn Expo is free to attend and sponsored in part by Nebraska Extension and the Nebraska Corn Board. The U.S. Drought Monitor from the University of Nebraska-Lincoln shows a drastic difference between the eastern 3/4 of the country and the western quarter. The former is doing extremely well for moisture, while the latter has seen much less than adequate precipitation. Nebraska Extension forage specialist Bruce Anderson says even if farmers and ranchers are in a situation with abundant precipitation, they should always have a drought plan in place for pastures and ranges. We recently talked with Bruce and asked him to explain why that's so important.
Well, I think drought really kind of changes a lot of our perspective of things, and unless we're prepared for it when it does start to occur, we can have some real serious consequences, both from the health of our animals, the health of our grazing lands, and our economic health.
Tell me what the first steps are to take for either a landlord or a tenant when you start talking about drought.
Well, I think one of the first steps that often this time of the year we need to be taking is taking a look at our lease. If we are renting land, the way that lease is structured is going to influence how we react to that drought. For example, if we just make a payment, pay so many dollars to rent ground for the grazing season, well, who's going to make a decision as to when the animals get pulled off of that pasture if it does turn into a drought? If they stay on there too long, that's going to damage the pasture, bring on weeds, cause all sorts of long-term problems that maybe the landlord doesn't like to see. Similarly, if these animals stay on too long, they don't have enough good feed, they can have animal health problems, performance problems, so the livestock owner has some difficulties with that. So we need to take a look at how we're going to make some of those decisions if we are dealing with rented land types of situations.
How much more challenging can a widespread drought be rather than just a small-scale drought?
Well, I think that's a good question to ask and something that we do need to consider, because if we've only got a small local area that has drought and we're facing a feed shortage for our own livestock, if it's just a small area, we usually can find feed fairly readily close at hand that we can feed our livestock. The hay price will probably be something reasonable, maybe a little elevated, but not totally out of hand. If instead we've got a widespread drought, something like we had back in 2012 over a large portion of the country, nobody has feed for sale. If you find any of it, it's extremely expensive, and so then you decide you're going to sell your animals. Well, everybody else is selling animals already, and so the price is severely depressed. So we need to be ahead of the game, beating everybody else to making decisions relative to that in order to keep our livestock in good shape, our livestock enterprise still profitable, or at least hanging on for better days.
Is there a recommendation as to how much hay a producer should have on hand?
Well, that really is going to depend a great deal on individual hay supplies. You know, I know a lot of people that if they're feeding a lot of hay as a major portion of what they're using for the wintertime, they may try to have something like 2 tons of hay for every cow for the full winter time. Others that have a lot of winter grazing opportunities, whether it's on winter range or on corn stalks, they may only need to have maybe a ½ ton to feel comfortable that they're going to get by. But no matter how much we may keep to try and take care of the animals, oftentimes the leftover hay that remains after the winter feeding season can be put to good use for dealing with drought situations, such as feeding that hay a little longer in the springtime. That lets the pasture grow a little bit more, gets a little bit ahead, more feed there for the animals, and that hay and feed is going to carry them into the summertime longer in hopes that maybe we do get some rain or we can make some adjustments in livestock numbers more easily.
Did we learn anything important from 2012 about how long we're supposed to leave cattle on that grass, or how that grass does recover from drought?
Well, I think we are learning in some cases that the grass has not yet recovered from some of that drought, especially when it gets to be abused so badly that a lot of perennial weeds start to invade into those areas, and especially so in areas where maybe it's cost prohibitive to do a lot of herbicide type of control of those weeds. It takes a long time and a lot of careful management in order to bring those grasslands back into good shape. So really looking at our resource and being careful that we don't abuse it to too severe of an extent can pay long-term dividends rather than long-term pains.
On the Market Journal website, we'll link to more resources on drought management for the pasture or range, including sample drought plans for actual ranges throughout the Great Plains. The January Nebraska farmer says Jeff Steffen has been working with no-till on his northern Cedar County farm for more than 20 years. He's been experimenting with varied crop rotations, both using cover crops and growing them for seed. This month's issue says the key for Steffen to incorporating cover crops has been getting the timing right. To read more about Steffen's experience in making diversity pay, you can check out the January Nebraska Farmer. In last week's weather segment, Nebraska Extension state climatologist Al Dutcher explained how El Niño impacted U.S. weather conditions in 2015. For this week, we sat down with Al to talk about his forecast for 2016 and 2017. We started by asking, what can we expect out of El Niño for the rest of the winter?
Well, if we're correct in terms of what the models are saying, we would expect that this trend for very aggressive precipitation pattern across the southern United States would only strengthen as we go forward in time. In fact, CPC latest forecast indicates a very aggressive wet pattern across the southern United States, but we're still seeing a tongue of that moisture moving up through Kansas and the southern portions of Nebraska. So the probability levels for this event have actually increased. In terms of temperatures, the temperature forecast has been consistent now for the better part of the last year. Would expect above normal temperatures. Yes, we'll get some cold air here and there, but long-lived Arctic outbreaks like we've seen several winters ago is likely not going to be in the cards. If we were to see that Arctic air starting to break out and hold consistently, that to me would be an indication that this El Niño event had been rapidly decaying, and we just don't see any signs of that at this point in time.
What do you think the spring brings with El Niño?
Well, there's where things get interesting. When we look at all of the global models used to predict the onset of El Niño or La Niñas, the consensus of the models is showing a sharp downtrend. We reached the peak here right around this time of the year, then we downtrend rather rapidly into the early summer period. Where the difference in the models is how rapidly that function of cooling occurs. About half of the models rapidly cool, the other ones cool it much at a slower pace. So you go into La Niña conditions either late summer or midsummer. But the big problem is, as we go into the fall, how rapidly does that cooling trend continue? And my theory is that we had a very strong El Niño. The likelihood is that we would go into a fairly robust La Niña pattern as we go into next fall. And that would go a long way in determining the intensity of our fall and winter period in terms of temperatures and precipitation. The earlier that we see the La Niña event starting to develop, the more probable that we were going to see a moderate to strong event.
But you do think that El Niño goes into summer?
Yes, I believe it's going to go into the early part of the summer. You know, we're at the third strongest El Niño event. So essentially what you're arguing for is that in order for us to have this El Niño completely void by the time we get into June, this system is going to have to fall apart right in front of our eyes. And I don't think it's going to. It's taken 2 years to get to this point. I just don't see it falling apart. But if it falls apart real fast and we see La Niña conditions developing earlier, then we don't see the concern so much with the late summer dryness, we start to push that dryness issue more into the early part of the season. And the most important thing is, where does that dryness set up? Does it set up over the central and eastern corn belt, the central and western corn belt? There's a lot of unknowns here.
Yeah, you mentioned that robust La Nina. What could that mean for production in the United States in 2016?
The last time we've seen a fairly decent La Nina type pattern develop was the fall of 2011. We've seen very warm, dry conditions. We had very cold conditions and snowy conditions that winter, but the moisture content of that snow was very light. We had put frost in the ground. We didn't get a lot of that moisture into the ground. And then in the spring, we turned back to a warm and dry pattern, and it just took off from there. So that's the major concern, is a lack of subsoil moisture recharge that would get us through those dry periods in the summer. And we had deficits as we went into the spring of 2012 from October of 2011 that are approaching 8 inches in northeastern Nebraska. So essentially you're running about 30 to 40% of your normal precipitation. And you know, when you get into the summer period, what we found is that when you look at the growing season precipitation, about 60% of our precipitation across Nebraska falls plus or minus 2 inches around the mean. So when you've got an 8-inch deficit, you're saying that you basically, in order to make that deficit up, you've got to be at that upper percentile, basically the 95 to 99% confidence level, or meaning only about 4 to 5% likelihood that you're going to get enough moisture to make up those deficits. So you would expect to see some problems. Subsequently, the other thing we worry about is a very poor snowpack in the upper Platte Basin. Now, we're going to have a big one this year, most likely. So it may not be as much of a problem, but you just don't know if this is going to be a single-year event or a multi-year event, and that's where the real problems lie. So if I had to say drought, I'd say that we might have some dryness issues at the last half of this coming summer, but more importantly, I'd be looking into 2017 for some significant problems across the entire western United States. And I don't like to go on a 2-year forecast, but when you have a big event like this, and 4 out of every 5 El Nino events revert to a La Nina event after their demise, that's where we should have the concern and be prepared to see some of those issues recrop themselves back up as we go into the 2017 production season.
Al will return for his normal weekly weather forecast in the next episode of Market Journal. Today's interviews can be found individually on the Market Journal website and through the Market Journal mobile app. They include information on potential spring planted acres, the ag environment in 2016, developing a drought plan for your range or pasture, and the effect of El Nino conditions into next summer. As always, you can keep up with Market Journal during the week by following us on Instagram, Facebook, and Twitter. Next week, Lee Schultz will join us to look at hog markets, and Roy Smith will be with us to analyze corn and soybean markets. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.